Hey guys, JJ here, back again with another Saturday Zoom networking. And again, we got a repeat performer by another unbelievable rock star out of the Pace Morby Sub-T community. None other than my good friend, Mr. Michael Mnatsakanian. He is just an amazing young man that has really done quite well with real estate investment. And he's here to share a couple things with you guys on how you can just improve what you're doing. Michael, how are you?
Hey JJ, thanks for having me on again.
Yeah, no, my pleasure. Hey, so really quick, one question I want to get to is for those that don't know you, where in the country you located?
So I've recently left San Diego and I live in right near Monterey, California. So just NorCal.
A beautiful place up there, beautiful. Hey, your topic today, we're going to be talking about the intentional investor.
Right.
And you've actually done quite well in real estate. You walked into this ball game with a little bit of a portfolio and you more than doubled that in a very short period of time.
hmm
And you just want to help other people with some of the things that you've learned to allow them to also succeed. So you want to take it away and just start off, and um, if you want to share your screen, you have that capability just to let you know. But
Thank you.
it's all you, brother. Where do you want to roll?
Awesome. Yeah, I'm just going to talk to you all today. There's no slides or anything. I just want to talk to you all, just talk about who I am, what I've done, and how you can basically do the same. But I don't know if you're familiar with Alex Hormozy or not, but he likes to do something where he defines some key terms, sets some ground rules. For me, I'm not really a huge Hormozy guy. I mean, I got the book and I like what he's doing, but like I'm not a business type of guy. I'm more of the real estate investing. And so I'll talk about some of the differences in him and I, but I really like that he defines terms since everyone kind of has their own interpretation of what's what. So the first ground rule I'm going to essentially set is that the ultimate goal for everyone here is that you want to achieve financial freedom. Essentially, you want control of your time. You want to be able to work, like if you're going to work after you achieve financial freedom, you want to do it because you're working on things that you care about. You're working where you want to be able to work. You're working when you want to be able to work. You're deciding who you want to be able to work with. And then obviously the why, right? That's the big one. I think that is the number one thing. If your ultimate goal is not financial freedom, then I honestly don't know why you're spending your Saturday here with us, talking about investing, talking about real estate. Like, I actually just want to know like why you would be sitting here if your goal wasn't financial freedom. Maybe you love houses, maybe you want to provide affordable housing to people. Like, I love all of that stuff. But for most people, the ultimate goal, that's part of the path, right? Is to do all these awesome things. But the ultimate goal is to be financially free. So you can choose what you do with your time and where you're doing that stuff. Everyone is here. They're dedicating time on their Saturday learning about networking, learning about real estate investing, joined a Zoom called intentional investing. Like what is he even talking about, right? You did all that because I assume you want to achieve financial freedom or you're investing in yourself and you're investing in assets for some, bigger goal. I think money is just one part of the equation. Money is the vehicle that allows you to be financially free, but you're not just doing it, at least my assumption is you're not just doing it to just accumulate massive amounts of money for the sake of doing so. You want to translate that to be able to do what you want, which for me is spend as much time as I can with my baby girl. She's just about to be 5 months old. We love to travel. I love to be able to work and help other people on their journey to financial freedom. And I love to be able to do that remotely at home or wherever I'm at. So those are really big things for me. And then, in my opinion, if your ultimate goal is to achieve financial freedom, then I believe you need to define like three key things. How much monthly passive income do you need to feel financially free? And with that, I think there are four levels of financial freedom. Financial freedom essentially is when you have enough passive income coming in every single month, which exceeds your monthly expenses. Level one financial freedom is when you're able to cover your needs, your housing, your shelter, your food costs, like whatever you actually need to be able to survive. Financial freedom level two is when you have enough passive income coming in every single month where you are able to cover your needs and your wants. So if you're someone who likes to travel, you want that really nice car, things that are a little, you want to put your kids in private school. You don't need to put that in private school. So that's a want. Like putting them in school is a need, but putting them in private school is a want. So financial freedom level two is when your passive income covers your needs and your wants. Financial freedom level three is basically your needs and wants with the security blanket. So it's essentially 2 times your needs and your wants. So if your needs are $3,000, your needs and your wants are $6,000, right? Financial freedom level one, financial freedom level two. Financial freedom level three is 2 times level two. So it's $12,000. And then I have this fourth level, which is, I guess, where I'm at essentially, and where a lot of people want to get to, where you're no longer focused on financial freedom for the sake of survival, but you're now focused on generational wealth. You're focused on accumulating as much as you can and helping as many people as you can so that you can grow your legacy and really help other people. For me, the ultimate goal would be to set my baby girl up to be financially free and to be secure for the whole rest of her life and generations to come. Why wouldn't I want that? And then I want to help other people achieve financial freedom. And I want to be able to then invest and donate to causes that really matter to me. I'm very passionate about the environment. I don't think kids should ever go hungry, especially in our country. As a veteran myself, I don't think, I mean, really anyone, but especially veterans, I don't think someone who served for our country should live in the streets or not have the mental health support they need or really struggle with anything. At minimum, they need the support to take advantage of the resources that are out there. Unfortunately, not a lot of people know about it. So those are huge causes for me that I would love to be able to dedicate more time and money towards. But if I'm struggling and I have to work 80 hours a week for a job that barely pays me anything, it's very hard to be able to do that. So that's why financial freedom is so important for me. And that's really where I'm at in this level 3 to 4 financial freedom. And then even then at that point, it's very important when you're defining how much monthly passive income do you need to be financially free. You might still work like I do. I still work actively. I just don't work a job. I don't work for someone else. As someone who's worked government forever, between the education system, between the military, and then for the county of San Diego, I don't want to work for other people anymore. So I don't. I just work for myself, but I still like to work. And I work for you all. I'm doing this stuff to help other people on their journey. So it's me working on the things that I care about, not just for some other corporation or government or whatever. I'm working for myself, my dreams, and other people, helping them achieve their financial freedom. So that's like step one, I think they need to define. How much monthly passive income do you need to feel financially free? And there's that 4 levels, and you can really define 1, 2, and 3 just based on budgeting and personal finance. Next, you really need to understand your current situation. So I break that up into 2 parts. There's a lot of things here, but like your current financial situation, right? What does your budgeting look like? How much money are you currently bringing in as income? How much are you spending on expenses? And if you broke that down, how much of those expenses are needs and how much are wants? From there, whatever income you have that exceeds your expenses are defined as your savings. And then with those savings, how much of that are you actually investing, right? That's all budgeting 101 stuff. I know most people don't do this, but I provide free tools so you can do this and make this very easy. So if you want that, I could drop a link later. Secondarily, another thing to understand about your current financial situation outside of the personal finance and budgeting is your net worth. How much do you currently have in assets? How much do you have currently in debts? Like, and what interest rates are they at? And then what is your progress each month? And each month it could be a little volatile depending on the assets you're investing in. Like the stock market is much more volatile. Real estate is a little more steady, except for blips in history. But over time, it's very steady at 5% appreciation. And then your debt is getting paid down each month. But like understanding what are your assets, what are your debts, what are the interest rates on that, and then how are you progressing over time? Especially when you take a step back and look at it over a 6-month, 1 year, 5-year time horizon, you should be trending upwards. Otherwise, you're doing something wrong. And it's really important to understand your debts because it really doesn't make sense to try to invest or lend money out, let's say at 12% interest rate return, if you're then paying 30% interest on credit card debt. Like just understanding that and paying down the highest interest debt and then investing once you have that handled is like a key component of it. And then understanding as part of your current financial situation, for your investments that you have out there, are you generating passive income and how much are you generating? So for your rental property, are you generating $300, $500 a month in cash flow every month? Like understanding that, because that is truly how you achieve financial freedom. Your passive income that exceeds your expenses comes from the cash flow generated from your investments, for example, real estate, or from your lending, whatever interest you're generating as a lender. And you may have nothing, but that's okay. You may have negative net worth, which is where I started in 2017. I was, college student. I paid my way through school and had to take out loans. I had very little income. I basically had no investments or anything when I started in 2017, fresh out of school. And then I had zero investments outside of, a couple $100 in Apple stock. So understand your current financial situation and then understand your time situation. That starts with auditing your time and being genuine about how much time you have after your non-negotiable, like your non-negotiable items are defined. For me, like for example, maybe your time with your family, you got to sleep, right? You got to account for that sleep time. Anything related to your health, any time you have to spend on work. I'm not saying go quit your job. I'm like the last person to go quit your job. I waited until financial freedom level 3 before I quit my job a few months ago. And it was my baby girl. That was the reason why. They asked me to come in office more frequently. There was no way I was going to do that, not with a brand new baby at home. And at that point, I spent so much time and energy and generated this, my portfolio, which I'll dive into. But I was able to do that to then I could have that option to just stop working when it made sense. But I'm the last person to say quit your job early. I recommend you achieve financial freedom level 2 at least before you consider quitting your job. But you have to start investing to be able to get there. So then understanding, right, how much time do you have available? For example, there's 168 hours in a week. So start subtracting away your non-negotiable items. For example, if you sleep 8 hours a night, there's 56 hours of sleep. If you work 40 hours a week and your commute to and from is, let's say 1 hour, it's 45 hours. You got to eat. Maybe it takes you 2 hours a day, 7 days a week to eat. So now you're left over with 43 hours for the rest of the week. Keep going down that process. Keep subtracting away the things that you believe are non-negotiable, and then really realize how much time you have available. I would wait until you put in time for TV and this and that. It's up to you, but just you have to define how much time you have available. And then at that point, you're going to know how much time do you realistically have available to dedicate towards your financial freedom. For me, I probably had more than most because at that point, my wife and I didn't have kids. We were up in Alaska. It was COVID, so like there was not as much that you can do. So for me, it was around 2 hours a day after work or after and during work, and that's because I was in the military. So my day started in the military up in freezing cold Fairbanks, Alaska. At I started around 4 a.m. We'd have to go work out, come shower, and then get ready, and then start work. And so for me, I had to basically take advantage of my lunchtime and after work, and then I really made massive progress on my weekends as well. And what I don't recommend is like starting out, especially setting up like 100-hour work weeks, like for your business, or like trying to do 12 hours in one day or whatever. If you have the time and you have the energy and you have huge short bursts of inspiration, you want to get some stuff done, do that. But it's much better to do 10 hours a week for months and years as opposed to 100 hours for 2 weeks and then burn yourself out. A lot of people think it's those short bursts of energy or that short burst of motivation. You don't want to be motivated to your financial freedom. You want to be committed to your financial freedom. And that means consistently working on this over time. That's literally what it is. Just consistently work on this over a long enough period of time, you will succeed. You literally will succeed. There's going to be no harm to you making income, spending not the full amount, right? Saving and investing that, and then doing that for years. That is how you'll be financially free. Trying to get it all done in a weekend is not going to be possible. Don't burn yourself out. Don't stress yourself out. Don't depress yourself. Exactly. It's a marathon, not a sprint. It literally, if you try to sprint through it, you'll end up kind of where I ended up after my first 2 years of investing. We talked about the first two, which are how much monthly passive income do you need to feel financially free? And then what is your current situation financially and time related? So then step 3 is your path. How will you get from your current situation to your ideal financial freedom? And I think your path is defined by your risk tolerance and the amount of involvement you want to dedicate based on the assets that you want to invest in. For example, I'll go through a few asset classes that I leverage and one that I don't recommend. Sorry, Hermosi. So stocks. Stocks are great, especially if you're investing like passively in index funds. They're phenomenal. They're guaranteed. You can get 10% annualized return over long enough periods of time. However, some people are too emotional for the stock market. They literally see a drop, they sell, and then it goes up, and then they buy. Like instead of buying low and selling high, they do the opposite because they allow their emotions to control them, when the best thing you can do is invest over a long enough period of time consistently. Just forget about the returns and just invest consistently in the total US stock market, like the S&P 500, and just invest in that consistently over time. You'll be financially free in 40, 45, 50 years, right? The reason why I don't like that is, although it's amazing because it's passive, and there's a lot of high risk in that short term for certain people, but you're literally guaranteed to be financially free if you have a high enough income and savings that you're dedicating towards investing in the stock market. The reason why I'm not a huge fan of it, and the reason why I pivoted and then went all in on real estate, was because it was too slow. It requires, like, you have to have money to be able to invest in the stock market, and there's really no leverage, and there's like no tax benefits. There's other things when you compare it to like real estate where it just did not make sense to continue going down that route. Don't get me wrong. When I was working my job, especially when I started leveraging other people's money to buy real estate, I had to do something with my money. So I was lending it out, and I was lending my money out to other investors, and I was also investing in the stock market, especially in tax advantage retirement accounts. I'm not going to go into a whole thing about stocks right now, but that basically too slow. You need to have money to be able to invest in the stock market, and you don't get to take advantage of like leverage. Second is business. I am not a proponent for going all in on creating your own business. I think a lot of people would say, "Oh, but you have a real estate investing business," or I've had like e-commerce businesses and I've done well. I had one of the largest bulk suppliers of reusable straws, like metal straws. I would sell 100 metal straws or more to businesses all throughout the country. But for me, that worked really well because it was very lean and low risk, where I would get customers before I even had inventory. And then that proof of concept allowed me to scale. But I did it with very low risk, and I still maintained a job and was investing outside of this. The reason why I don't like business is I think it's too risky for most people, but it can have very high rewards, right? This is the Hermosi path. However, the majority of small businesses fail. And if you really want it to succeed, you have to work like crazy when starting out, and you have to become like a jack of all trades until you make enough money to then hire people. It just was not at all with the lifestyle goals that I was looking for. So it was not something I fully ever committed to, even though I've had successful businesses in the past. The main reasons why I don't like it: too low of a success rate. If you really want to be at the top, you're going to have an insane work ethic, because everyone around you will, like those successful ones will. And you usually need a good amount of money to start and runway. Plus, you need a good amount of time to start and like runway to not have to go back to a job for money. Next is lending. I'm someone who lends to real estate investors all the time. I always have a solid amount of money, and that's where the real estate, that's where the stock market was great, because I can take those tax advantage retirement accounts, put them in a self-directed IRA, and then lend that out to other real estate investors, super tax, like completely tax-free. It's phenomenal. Like, depending on what retirement account is in. I'm not going to get into the weeds of that right now. I think, once again, lending is phenomenal. You can get very solid returns, but it is very risky if you're not intentional. If you're not someone who is being diligent about vetting the person you're lending to and vetting the deals that you're lending on and overseeing that, you could literally lose all of your money. You're not going to lose all of your money in the stock market unless you're investing in one company that goes bankrupt, right? But if you're investing in the total US stock market, if that goes down, well, we have way bigger problems than money if the total stock market goes to zero. Where lending, you could literally lose all of that in one single bad investment. So I think it's a solid path, but you need to have money to lend money, right? It's kind of similar to the stock market. We need to have money to lend money, and you can leverage other people's money to lend out. But I'm not a proponent for that, not until you are like an expert with your own funds first, because now you're introducing someone else to the equation, and you could end up, if you're not doing it the right way, you're literally putting someone else's money on the line. It's not selfish. It's just so irresponsible to risk someone else's money so hopefully you can make some money, but then you're not even solid at this thing yet. Can people do it, and do they sometimes do it well? Yes, of course. But I think it's too much risk, especially if you are not successful and you haven't proven it that you can handle it, like you haven't done it before. So my favorite path, that's why I'm here, right, is real estate. I think, once again, it's still very risky if you're not intentional and you do not understand like deal analysis. You do not have the ability, like you don't have the skills and or experience and or network to analyze an investment property effectively to know, is this a good deal to buy or not? And what do my returns look like? Am I going to be able to pay like myself, pay all the expenses, pay my partners if I have any? Once again, you can lose the entire investment, at least the money you put in to acquire that investment, especially if you're speculating on appreciation rather than focusing on cash flow. So if you're buying a property because you're buying it at $100,000 and you think your investment strategy is that it will be $300,000 in a year or two, that's dumb unless you are intentionally fix and flipping it and forcing that appreciation through adding value. But if you're just hoping it goes up, that's not an investment strategy. That's literally gambling. Go to Vegas. It's more fun than investing like that in the real estate world. That's literally why the economy crashed in 08. People were literally, that was their investment strategy. It was even crazier than that, but that was a huge issue for it. There's this saying that in the sub-2 community that equity comes and goes. So like your let's just say the amount the property is appreciated, or the value of the property minus the debt, that's the equity. The equity comes and goes because that fluctuates a little bit and the economy can affect that, but the cash will always flow. So if you're buying properties and looking at the deal, like really analyzing it and the fundamentals of the investment, then your cash flow is going to be solid. Things can happen, but it's a lot less likely. A property can lose a decent amount of value, especially if like something drastically changes in the economy. But like for the most part, your rents are not dropping massively, right? Unless you're speculating on that, they're not dropping massively. If you're going all in on expecting an Airbnb to like crush it and you have no numbers for that, yeah, you have higher risk in that sense. But if you're looking at it and doing more reasonable management strategies, as someone who also owns short-term rentals, I'm not knocking it, just saying it's higher risk than like a long-term rental or even the rent by the room strategy that we're massively implementing right now. Another reason why I really like real estate is that 90% of millionaires have made their money in real estate. My assumption is that a lot of these people are people who own or occupy these properties. So they bought it and they lived in it, and then maybe they moved out or they still live in it. So they have like maybe 1 or 2 properties that way. That's still insane that just buying a house and holding it long enough, maybe 2 of them, has created 90% of the millionaires out there. And I know millionaires kind of we're inflation and all that. Like millionaire doesn't mean what it used to mean, but nonetheless, like that's the stat. Something like that, right? It may not be 100% accurate, but that's the stat out there. And even if it's not, a large proportion of millionaires are real estate investors, or at least have real estate investments. So then imagine the person that has 1 to 2 properties and became a millionaire. What if you had the exact step-by-step process, all the necessary tools, the skills, and the support to then buy 10 properties, or 5 properties, 10 properties, 20, 50, 100, literally whatever you want to do. It's up to you how much you want to scale. That's what blows my mind, is the ability to do that, especially because you can buy real estate using none of your own money, as long as you are proving that you are a solid operator, a solid person to buy and manage this asset, and that you are really diligent with your deal analysis skills. And that's essentially what my intentional investor blueprint is. That's basically what I've utilized all the way up to this point. So essentially, you're defining your exact path to financial freedom. You're leveraging real estate and other people's money as your main vehicle to generate passive income, and that's going to help you build massive wealth. So once again, you're buying real estate using none of your own money, which is tremendous because that's extremely scalable, and you have infinite returns if you're using none of your own money. But you're doing that to generate cash flow, right? From the cash flow is the passive income, the amount that you can live off of. That's what's going to help you be financially free. And then you're building massive wealth along that process. You're not banking on it, but that property is appreciating in value. Maybe not every month, but every year, every couple years. 5% every year is like the national average, how much properties appreciate in value. And we saw some crazy, crazy increases over the last couple of years. Every single month, my tenants are the ones that are paying down the debt, right? We took out a loan, or we creatively took over a loan to acquire a property. And then my tenants are the ones that are paying down the debt for me. And if you're really strategic about real estate investing, you pay zero taxes. You don't have to pay any taxes, at least federal taxes, right? State taxes, it just depends. But the majority of taxes you're paying are federal taxes. So then how do I know this, right? Well, that's exactly what I did over the last 4 years. I built a portfolio of over 50 rentals worth right around $20 million using little to none of my own money. And that generates me over $15,000 a month in passive income. That's the cash flow. And just the debt pay down alone is over $20,000 a month. So my net worth is increasing $20,000 a month, not because of appreciation, property going up in value, because my tenants are paying down debts on my behalf every single month. It's literally insane. And yeah, right. So the property increases in value over time, and I pay literally no federal taxes, but I do pay state taxes because I live in California, and that's my fault, but that's where my family's at. So then here are my 3 fundamental pillars to achieving financial freedom through real estate investing. You have to learn how to systematize your business, like your real estate investing business, into repeatable actions. Like I said, being consistent over a long enough period of time is how you're going to be successful in basically anything, like any sport, working out, your diet, like investing, whatever you want to do. Consistently taking the right actions and making it repeatable and easy to do is how you achieve whatever you want to achieve. And that's essentially what my intentional investor blueprint is. Just like a step-by-step process of this is exactly what you do over and over and over again. And that is how you're going to be financially free. That's how you're going to be financially free, by buying real estate using none of your own money, right? So it's like a double benefit. Second fundamental pillar is mastering deal analysis, essentially understanding how to evaluate an investment opportunity, but then also understanding which ones are not worth your time, right? You only have so much time in this world. Don't overspend time looking at every single thing that's out there that does not fit within your buy box or doesn't have the returns that you need. Understand which ones are great investment opportunities or potentially great investment opportunities to then analyze in more detail, and then be able to effectively and diligently like analyze that investment opportunity. I think whether you're a real estate buyer, a lender, you're someone who's intentionally connecting, even a wholesaler, that's what made me a successful wholesaler, was I was working to bring the right deals to buyers that already knew what they wanted to do. A lot of wholesalers out there are not very good because they put bad properties under contract and just hope someone wants to buy it. Where I reverse engineered it, I would bring the right deals to the buyers based on what they were looking for. And that's why every single deal I put under contract was always sold, as opposed to the 50+% people are deals that they're wasting and all the time and money that went into that. What's great about real estate, right, is it's the only asset that you actually have control over. When I invest in the stock market, I mean, it's kind of like lending, but I can't, unless your contract dictates this as a lender, you can't really step in and force the operator to do something because you think that's the best. If you're the one controlling the investment and you're the operator of it, then you have total control of what you do, where you're buying, what you're buying, and then how you're managing that property, like what improvements you're doing, all that good stuff. If you are not becoming an expert at analyzing deals, you're literally doing a massive disservice to yourself first and foremost, because why buy investment properties that are not pushing you towards your goals? You're just wasting time. You're wasting your own time and your own money or someone else's money. You're doing a massive disservice to yourself and your financial freedom goals. That time could be spent doing so many other things, even just having fun. Like it doesn't have to be financially driven. It could be just fun stuff. And you're doing an even bigger disservice to your lenders by not diligently analyzing those investment opportunities, because now you took their money, you bought an investment property that did not work in their favor. Now you've wasted their time and money, and you don't know how many years, even decades it took them to save that money. Not only did you waste their money, which is one of the worst things you could do, but actually I think the worst thing that you can do is you've also made them believe that this whole thing's a scam, or it's not worth pursuing. So now you've completely not only wasted their money, but you've derailed their entire path to financial freedom, which I literally don't understand why this wouldn't be the goal for everyone to be financially free, because I don't know why you would want to work, or you would work diligently 40+ hours a week until you're 60, 70, 80 for the rest of your life. Like, I don't know why you would do that if you could invest in a short term to be financially free and do whatever you want for the whole rest of your life. You literally have one life. I don't know why you wouldn't do everything you can to then be free to then choose to spend your time on whatever you want to spend time on. And I can't speak for everyone, right? That's why there's, a couple dozen people in this room right now live, and there's the majority of people are doing whatever else that they're doing, right? You guys are willing to invest in yourself. You're at minimum investing your time to then go towards that financial freedom. I can't speak for everyone, right? But I just can't put my head around why someone would be willing to do that. And maybe they just don't know any better. I mean, there's a variety of reasons, right? But if you did know, I don't know why you wouldn't do everything to then become financially free. So we talked about two of the pillars, right? Learning how to systematize your business into repeatable actions, which is essentially my intentional investor blueprint, and then mastering deal analysis, which is something that I've been doing for years and something that I literally educate other people on for free on social media, on YouTube. And then I'll talk more about some other things that I'm bringing up. I have like the number one ultimate creative finance calculator out there. Like I literally make this as easy as for people as possible, including a free creative finance and conventional finance real estate investing calculators, because I believe it's one of the most fundamental parts of achieving success. And then number three, which I'm not the best at necessarily, is understanding the importance of community and networking to achieve your goals. So I understand the value. What I'm not the best at is building community, and I'm pretty good at networking. It's just, I'm not that guy to text a lot. I'm not that guy to do phone calls. Like I don't like to do emails. Like I'm not one of those people who likes to communicate that way. I'm more in person. I like these type of live calls, but there's other people who are phenomenal at building community, right? JJ Zizian's masterminding network, sub two with Pace Morby. I've started my own version of that in my free school community called Wealth Through Real Estate, which is a community of 400 plus buyers, lenders, capital raisers, and intentional connectors in there. So I'm building that out, but I'm not going to be the one who's texting everyone, or that's just not my thing. I'm more present and in person is kind of where I'm at. And you can, like, do you need community and networking to achieve your goals? I don't know. You could probably do this solo. I just don't recommend it. That's basically what I did, and acquired 26 rentals by doing that. But it put me into a state of depression. Like, I was literally doing everything so that I could achieve financial freedom, and I was doing all of it, but like, at what cost? My time was spent working on trivial parts of my business because I wasn't outsourcing anything. I was finding the deals. I was doing the renovations. I was doing the property management. I was doing literally everything until I realized that I don't need to actually do that. I like was not enjoying any part of the real estate investing journey at that point, besides the money that was coming in, which is great. Like, I know that's a place of privilege to say, oh man, I'm working and I'm getting all this money like through real estate investing, but I was not enjoying that process. And I really lost my purpose of like, why am I even doing all this if I'm not enjoying any of this? Like, cool, the money's there, but what's the point of money if you're not enjoying what you're doing? So when I started working with others, with partners, including capital partners, right? Private money lenders who get a fixed interest rate return on their money when they lend to me, or private money partners who I jointly own real estate with, and started educating others, is when I really reignited my purpose, and that turned everything around for me. The first 26 rentals, they were all up in Fairbanks, Alaska, because when I was in the military, that was my local market. That was my duty station, Fort Wainwright in Fairbanks, Alaska. So I had a $1.5 million portfolio at that time. And since then, since this revelation right around 2 years ago, really started buying more aggressively in the last 18 months, I've grown my portfolio from 1.5 million to 20 million. So my journey of real estate investing has only been 4 years, 4 really great years, but the last two have when I've really started really started focusing on all three pillars. I was already really good at mastering deal analysis. I was pretty good at systematizing my business, but I was just doing all of it. So it's cool that I had these systems, but I was just doing all of it. So when I started outsourcing that and then focusing on community and networking, it just became so much more fun. And I took my portfolio and basically multiplied it by like 15 times. And yeah, like, sure, I was making less cash flow per property because now I was outsourcing certain parts of it. But I began to love the work that I was doing. I was exchanging my cash flow to free up my time to then work on the parts of the business that I truly enjoyed and that only I could do. I used excess time to go have like a bunch of fun, do the things that I really enjoy doing, especially now with my daughter, my wife, and I'm a nature guy. I really love to go hiking, fishing, hunting, biking, like whatever it is. I love to be outdoors. And the main thing is it's just more fun. Like, I don't know if you've ever done a team sport, but it's much more fun. And it's much more like there's a much more purpose and accountability when you're doing things with others. So I have my business partner, like we created Coast to Coast Vets 18 months ago. That has just made this whole journey so much more fun. And then all the people we've brought on and been able to help is just the best part. There's this quote that really resonates with me now, not Michael 2.5 years ago, but now. If you want to go fast, go alone. That was always me. Fast. We're going to get this done immediately. It's going to be done right away. I'm going to do it on my own. There's no point. I can just do it better. I'm going to just do it fast. I'll just do it on my own. But really, if you want to go far, you go together. And I think that's part of that consistency, right? I went fast, succeeded what I was trying to do. I hit financial freedom level 1 and 2 in less than 2 years. Actually, in 13 months between buying my first unit to my 26th, that was only a 13-month timeline. Like I said, I go fast, right? I'm not saying anyone else should. I just went really fast. But it was unsustainable. I could not have continued on that path. And doing things with others has made this process so much more enjoyable. Once again, highlighting JJ's group, sub 2 with Pace Morby, my wealth, the real estate community, all that good stuff. So we'll get into questions and all that stuff. I just want to highlight something that I'm opening up only for the month of November. What I do every once in a while is something called the Veteran Investor Bootcamp. It's a 6-week intensive bootcamp. I take maybe 1 to 2 real estate investors who are already proven real estate investors, and I help them scale their portfolio and be much more intentional on their path to financial freedom. I help them out with pretty much everything in their business, and I'll talk kind of some of the key parts of it. And I do that like with 1 or 2 people maybe every couple months. Like let's say every quarter, I just pick and choose when I'm going to do it and who I'm going to do it with. These are people who already have 17 rentals. Like right now, the guys I'm helping, one guy has 17 rentals, but it's all been traditional financing. He doesn't yet leverage creative financing. He doesn't yet leverage other people's money. He needs to improve those parts of his business to scale. The other person does more fix and flips and connecting, but they have a lot of experience. They just need to take their business to the next level and systematize it. And like what we talk about in that, right? It's like kind of that 6-week intensive is focusing on your financial freedom foundations, where you're at, where you're going to get to, mastering deal analysis, like literally everything about acquisitions, management, everything, the whole process, systematizing your lead generation systems for investment opportunities, developing your exact blueprint for property acquisition and due diligence, right? Leveraging mine, but then customizing it to who you are in your business, mastering the art of capital raising, especially for buy and hold rentals. Not a lot of people are very good at that for buy and hold rentals. They can do it for a fix and flip. They can do like you can raise some money for earnest money deposit because people get ridiculous returns on that. But really raising money for buy and hold rentals, which is the best path to financial freedom, like in the real estate space, no one's got that really solid. I don't know anyone who's got it better than me. And then all the systems, tools, resources, all the SOPs I utilize in my business, you get access to all that stuff too, right? So what I'm doing is I'm taking all of those recordings, all the resources and support, and then putting it into the intentional investor group coaching, which is going to start November 1st. I'm going to leverage the school platform for that. And it may or may not be the right fit for you. If this is something that you're a real estate investor that's looking to scale and actually achieve financial freedom, that might be the right fit for you. I'm also including a 7-part blueprint to real estate investing, which I've helped dozens, maybe over even 100 people buy their very first investment or buy their next one, right? Maybe someone who's earlier, maybe you don't have 17 rentals, you have none and you're looking to buy your first, or you have 1 or 2 and you're trying to be more systematic about it. I'm including that as part of it just to help those who are newer, as well as those who are looking to scale massively. I have dozens of deal analysis trainings in there focused on creative financing and traditional financing. I don't know if you can see all the sub 2 stuff, but I love me some creative financing. I think almost the majority of the last 16, 17, almost $18 million of real estate have all been leveraging creative financing for the deal analysis. So it's creative financing, traditional financing, estimating your rental income, whether you're doing long-term rentals, short-term rentals, mid-term rentals, or pad splits, estimating your expenses for each of those management strategies, analyzing investment returns, and intentionally negotiating, not just negotiating because you say, hey, I want to drop the price $20,000, being very strategic about what you're negotiating and why, right? Focus on cash flow and cash on cash return primarily. And then most important, well, one of the most important for me is determining how much capital you need to raise from your partners and the returns that you will receive, the returns your partners will receive, and the whole, like understanding that as a fundamental part of your deal analysis. You can invest in real estate using your own money. I did it with some of my properties, although it was little to none of my own money because I was house hacking. And when I say using my own money, I was structuring seller finance deals where I was pretty much using the seller's money instead of putting a down payment down. They were acting on my down payment and the loan because I was able to structure them so well. But like understanding you can use your own money and what the returns look like, or if you use other people's money, what do the returns look like for them? What is then left over for you? What are your returns? And then how does that all work on your path to financial freedom? So that's basically the gist of the education is the 6-week veteran investor bootcamp and all the tools, resources, everything I use in my business, the 7-part blueprint to real estate investing, whether it's your first deal or your next one, and then dozens of deal analysis trainings. Plus, I'm the kind of person that if people ask me questions, as JJ mentioned, I don't really like when people text me and say, hey, do this one thing for me. I need to do this because I already have my calendar very full. I can't just sit there and dedicate time to one individual, but I do a lot of stuff in group settings. So if you ask me a question, I'm going to do my best to then do that in a recording so then everyone else who has that same question will also benefit from it. So I do a lot of that. So if you ask me a question, I try to help everyone with the answer. And that's where like doing it in the community setting is very helpful. So if there's parts of maybe for me, or the more experienced investors, we could skip a few steps because we kind of understand or we kind of can fill in the dots, but you have a specific question. I'm always happy to add and improve things to make it better and better for you and your business. And the cool thing is like you can cancel at any time. It's just a monthly thing, but the longer you stay, the more you unlock. If you're in my free Wealth Through Real Estate community, you know that I'm always giving away awesome prizes every single month to the biggest go-givers and networkers. But I'm also including for everyone who joins in November, only the month of November. After your first month, you get lifetime access to my ultimate creative finance calculator. That calculator makes deal analysis and capital raising an absolute breeze, at least from like the numbers perspective. after your second month being in there, because I want you to learn and then analyze. And then after the second month, I'm going to do a one-on-one consultation with everyone who joined in November to really evaluate where are you at, right? Based on everything you've done, where are you at currently, and then help you develop and define your custom roadmap to financial freedom. Obviously, the idea is it's going to focus around real estate investing in some capacity, but depending on how much time you have available, how much capital you have available, how much experience you have, you're going to have a little bit of a different roadmap than than someone else. So this starts November 1st. It's going to be $500 a month, and you cancel any single time, and the doors are only open for the month of November. This is unless we dip below 100 members. So as many people that want to join in November can join in November. However, I'm going to close the doors on it after November, unless we dip below 100 members, because I ultimately want to ensure that I'm providing real value to those that are action takers and are committed to achieving financial freedom for their family. Define where you're currently at. Like, the best thing you can always do, iterate where you're currently at and then where you want to get to, because where you want to get to is going to change over time. Where you're at is going to change over time. So just audit that. Like, my wife and I do it twice a year. We audit where do we want to get to and where are we currently at. And then that helps us refine our map, our path to getting where we want to get to. So then define your path to get there. And even better, if you just copy a path that's worked for others, like the intentional investor path, that's one route to get there. Hermosi has his path. Like, lenders have their path. Wholesalers have like, everyone's got their path. I wouldn't say the majority of them are able to achieve it. Like, you're not going to be financially free from wholesaling, like, unless you buy real estate. What I've learned is you don't need to wholesale to then fix and flip to then have money to buy real estate. You can just master your skills first and then be able to buy real estate using none of your own money. So if you want that path, I have that path, that specific path. If you want another one, follow that one. Just choose a path, know where you're at, where you want to get to, and define your path to get there. But be realistic with your timeline and be very consistent. Like I said, if you're trying to force yourself into an unrealistic timeline, you're going to generate $100,000 a monthly cash flow in the next year, and you have zero right now. All you're going to do is set yourself up for unnecessary stress and burn yourself out. If it's not realistic, and that's a lot of, actually, in the Wealth of Real Estate community, I just uploaded some, that's the free community, some more trainings, just outlining various paths. For example, a lot of people want to buy, like, they see my path, 50 properties in 4 years, or 26 in the first 26 rental units, right? A lot of that was multifamily, but 26 rental units in the first 13 months. And I say, I want to do that. Well, just understand that that may not be realistic for you. Interest rates were lower when I started, and I'm very aggressive and an action taker. And I had more money saved up at that point. But just understand that, be realistic with your path, and don't stress yourself out and don't burn yourself out. Once again, 2 hours a day is way better than 12 hours every once in a while. Consistently take action over time. Even if you did 30 minutes a day, if you're willing to dedicate 40 plus hours a week, every single week, to make someone else's dreams come true, make someone else rich, you deserve to dedicate the time to building your dreams as well. It's even better if you're intentional about it, right? Because the time that you have, it's like, practice makes perfect, right? But they've gone back and rephrased that. It's like, good practice makes perfect, right? You have to actually, I think it's perfect practice makes perfect, right? The better you're practicing, the better the results. But at least practicing is going to move you forward than just doing nothing at all. Some people have higher goals and some people have lower goals. Just do what is in most alignment with your goals, and just enjoy the journey along the way. That's the best part. Don't burn your life out, focus solely on money. Do the things that really resonate with you. For me, it was worth dedicating more time and effort early on. So at 30 years old, I can do whatever I want for the rest of my life. It's pretty sick. Rob, you had a question earlier. You want to go for it?
First and foremost, man, thank you for your service.
Thank you. I appreciate that.
Yeah, but man, man, you just gave me so much. I mean, I'm glad I raised my hand first.
There you go.
So, hey, man, I'm just going to go straight to the point. Right now, my path is as a lender. I'm an affiliate lender, to be exact. I have no capital and everything. I'm just starting to gain traction.
Right.
So, how do I find the money? How do I find the people that are going to trust me? Right.
So you're not going to want to hear this, but the funny part is, my lending business benefits massively from my buy and hold business, in the sense that the intentional investor blueprint is the same thing. Because you still want to understand how you're going to generate leads for your business. You still want to understand well, let's start from the beginning. How is your path to financial freedom going to work as a lender, right? You got to understand that. if you are connecting, like I'm not someone like what you're doing is capital connecting.
Right.
Only type of connecting I believe in is intentionally connecting, which means you are analyzing these deals, you're determining it's a great investment, you are verifying the borrower of the deal, and then you're providing solid value to both the borrower and to both the lender, right? So you're providing that value to them. So you need to be effective at analyzing deals. You need to master the ability to analyze deals and make sure, because I have a lot of these, unfortunately, I wish this wasn't the case, sub-2 community and outside of sub-2 community, people who are connectors bringing me investment opportunities to lend on. And I have to call them out live, and I don't care. I'll do it live in front of everyone. Because if they're bringing a deal, if they don't know and they're just ignorant, that's one thing. But if they're being malicious, I hate that. If they're bringing me an investment opportunity that doesn't make fundamental sense, that there's no way viable, like let's say on a fix and flip, there's not enough spread to then pay me back my loan and then my interest, and they can't even see that at face value, then what value are they adding? They're just trying to take advantage of a lender like myself, or even worse, a lender who doesn't know, and they're trying to take advantage of them, and they're going to lose their money so the connector can make some money. So if you're able to be an intentional connector who is diligent with the ability to analyze deals and systematize your lead generation, understand the full process of the full buy and hold process. Maybe you don't need to worry about management and all that, but you understand the process from getting from lead all the way to closing and through closing and taking care of your capital partners. And then you're also raising capital. You have to raise capital to then lend it to other people. I raise capital to then invest in my own real estate investments. And then I now raise capital for my own real estate investments. But when there's more money than I currently need to deploy, then I connect that to other proven operators. It's all the same skill set, but instead of putting the money in your own investments, instead of focusing on that one additional lead of real estate investments, your opportunities, that lead for you is other operators, other buyers, right? So you still need to generate that lead. That's the one slightly different part, but you are the one who is raising that capital, analyzing these deals, and then deploying it to other people's investments. Does that kind of provide some clarity, or should I expand on any of it?
No. I mean, it makes total sense. I mean, basically, I understand. There are so many parts and pieces to go through that transaction, if you will. And I understand. I want to be that person too, who's understanding it, nurturing it, guiding it, and then closing it. But until I get to that level, right now I'm gaining traction, just and some visibility along my way. But I just want to know what's really. I want to scale my business. I want to be the guy that people want to come to and say, "Hey, I can trust him. I know that he's got the connection."
I know you want everyone to say that, but what you really want is you want the lenders to say that. Who cares if the operator
okay.
the operator is
Exactly.
going to trust that, like the borrower is going to trust that you can raise the money, but they don't
Yes.
really care outside of can you raise the money. You want to build the trust of lenders by proving to them how solid and phenomenal you are, that you're going to protect them. And the way you protect them is to verify the borrowers as much as possible. And then to also, and I'm including all this in intentional investor because I am an intentional connector. I really am. I do that as needed, but my main priority is my buy and hold business. But I do also do that. And I have all these processes, all the systems for that. I should have probably prefaced this with I'm a chemical engineer by trade. I was an environmental engineer with the Army. I'm an engineer.
Oh.
I think in systems and processes. So I think of like inputs, outputs, what's the path look like? How do we systematize it? What's the bottleneck? How do we improve things? And then I just apply that to real estate, which is probably a huge reason why I've been able to just make this so much easier. Because it's like, okay, if I want to buy real estate, I got to do this. 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 If I'm not doing this, I'm not gonna be able to close that, right? If you can't get to Z without doing C or whatever, like, or get to 10 without counting to 3 or whatever. I guess you probably could. I don't know. There's ways around it. But the main idea is systematizing that process is phenomenal. And that's why I tell people you do not need to wholesale. You do not need to fix and flip, because if you're doing that for the money, there's better ways to do that. There's way better ways to get money through real estate investing outside of just capital raising. Connecting in particular is one great way to make some of that active income. But the skill sets you get as a wholesaler or as a fix and flipper, sure, they translate. And from my experience, it translated over to being a better buy and hold investor. But the best skills, if I had to go back, I would never wholesale. I would never fix and flip. I would have intentionally connected. I would have found proven borrowers, vetted them, and said, okay, I'm going to help you find money for your investments on investments that I think are deserving of like capital raising. And I would have raised the money for them, because when you buy and hold real estate in the future, you've already developed the ability to analyze great investments, and then raise the money for those investments. And then secondarily, I would intentionally connect or intentionally bird dog, essentially. You're now talking to buyers and you are getting buyers exactly the deals they're looking for. And you're saying, hey, the thing I hate the most is people sending me Facebook messages of random deals. Or random, not even deals. I don't even want to call them deals because most of them suck. They're just wasting my time, sending me bad opportunities. And I don't know what they hope to get out of it. Like, it's not even their deal or anything. They're just sending it my way. Thank you. But what would be better? You look at that, and it was what I asked them. I say, like, why should I invest in this? To verify that they're sending me stuff that they think is actually worth investing in. So then if you're intentionally bird dogging for an actual buyer, you are verifying, you know what this buyer wants, and now you're finding opportunities and analyzing them to say, hey, I know this fits within your buy box. So then when you have to apply that to your own buy box and say, hey, this is my buy box, here's what I'm looking for, here's how I'm going to generate these deals, and here's how I'm going to analyze them, and here's how much capital we're going to need on them, then you can just do that for yourself. Intentionally connecting, like capital connecting, and intentionally bird dogging are the two ways that I would focus on building active income and then building the most applicable skills to then be able to buy and hold real estate, great investments, and raise all the capital for your deals. You literally are doing that, and you're just combining it all and adding the operations the whole process itself of the management. Does that make sense?
Yeah, no, absolutely. So just to begin with, I mean, my last question, because I'm sure there's a lot behind me. Where do I intentionally find these individuals? These are they the borrowers, right? Or the lenders, I guess.
Okay, let me give you a perfect example. I mean, you're in sub two, obviously, at the hat, but also my wealth to real estate community. It's primarily full of buyers and capital raisers. Go in and connect with people, like build your network and connect with people and say, hey, my name's Rob, right? Post everywhere. Hey, my name's Rob. I'm growing my experience or like growing my experience. I want to start buying real estate very soon, ideally leveraging other people's money. For the time being, I'm looking for buyers who need, like, proven buyers who have done 5 or more deals, right? Let's just say 5 or more deals of a certain management strategy. That's one of the vetting for me. I want to make sure they have experience doing multiple deals in that market of that strategy. I don't like connect money on people who are not proven. Like, that's just what I personally, for me, you can do whatever you want. For me, that's one of the ways I filter out experience or not, is they've done that management strategy in that market a couple times. But I would say, I'm Rob. I'm looking for people who have done a couple deals already and are looking to scale using other people's money or are looking for more access to capital. I want to intentionally connect capital for your investments. I want to be the capital raiser for your business. It doesn't have to be exclusive. You don't have to exclusively give them all your capital, and they don't have to exclusively rely on you. But then you have the opportunity, because now one of the things, like one of the distinctions is, if they're a good borrower, they're creating the marketing material, they're doing the deal analysis, they're doing all these things to make your life as a capital raiser easier. They're saying, hey, here's the marketing material, here's the returns that we're offering. Go present this to the people that want to lend on investments. When you're a buyer, you're the one who has to do all that, right? You or your team has to do all that. Well, they're making it easier. They're saying, hey, this is what we're looking to buy. Here's our experience. You're leveraging their experience, and then you're leveraging their marketing material to then raise money on that. You're saving time, not having to worry about that. And you're focusing your time on finding lenders and then articulating the returns of this investment.
Wow. Hey, man, thank you. I've absorbed a lot of your time here. I'm sure other people are waiting, but, thank you very much.
You got some great value there, brother. Unbelievable value.
Hi, Michael. Thanks for all those wonderful nuggets. I appreciate everything that you've shared. And I'm making this shift, an intentional shift. I know firsthand that health is truly wealth, because I had to fight hard to regain my health to get back to real estate investing. But now I'm trying to transition into the buy and hold with the pad split concept.
I love pad split. I love it.
To create access to care, to access to therapies, give people their health back so they can get back to creating wealth. So what's the best strategy then to be able to shift?
So I love that you have like a purpose behind the pad split. Like you want to do co-living, like multiple people in one home, focused on a specific type of audience. I don't personally know like the legality of being able to do that, like filtering your tenants based on this one specific thing, unless it's like an assisted living center or a sober living home where it's like kind of part of the business model. Like you have to make sure that you're not you're not violating any fair housing laws by saying yes or no based on, certain factors that are protected in, at least in our country. I don't know. Some have, some states might be more, yeah, I live in California, so a little more strict than other states. Your question is what I would, this is me personally. I think the time to really focus on your purpose is after you've achieved financial freedom. I think your journey can involve focusing on your purpose, but it's much easier to focus on building your financial freedom and then saying, hey, now I'm going to spend this excess. Like, I don't need to do this for money as much anymore. I can focus on spending the excess time and energy to providing value to this specific community. But your number one goal should be, how can I maximize my income by not being a slumlord, right? But by buying great real estate, taking care of your tenants. That's how you honestly, I make so much more money probably than a lot of real estate investors because I invest in my properties and my tenants, and I take care of them. Something goes wrong, I'm the first one to handle it. I literally say, tell me everything wrong. Oh, we had to move in cleaning and that there's a piece of dust there. Fine. I'll take care of it for you because I want them to know I care about them and the property. And I want them to take care of the property and just have a good human relationship with me. It works really well. I didn't have a single tenant that didn't miss payments because I take care of my tenants, right? So not being a slumlord to maximize income, but focusing on not pigeonholing the tenant type early on in your journey, achieve financial freedom, and then really start giving back. Then start focusing on that. And that's actually why I'm scaling my portfolio so much now, even though I've achieved what I wanted to. I'm scaling now because my mentor, Pace Morby, told me I am quite literally doing a disservice by not scaling my portfolio because I have because I said, I'm I don't even know what's the purpose of all this anymore. Like, I'm pretty much done. Could go do whatever I want. I want to help other people. But he said, with your knowledge, with your skills, with your experience, with your momentum, you're doing a massive disservice. If you only need $20,000 a month, you shouldn't stop at $20,000 a month. Go make $100,000 a month and then invest that and donate that and then focus on the causes you care about. Take care of your family and your lineage long term. Do great things with the money, right? Because money allows you to accomplish great things. Focus on that, in my opinion, after you've got your needs met.
Okay, I appreciate that.
Of course.
I want to thank you for being on. Great topic, great content. To say, if you guys are watching on YouTube right now, definitely want to connect with Michael. And again, that would be from his. Are you on your Instagram also, Mike, or no?
Yeah, just go to my Instagram. That's the only link I have in there is my Wealth Through Real Estate, the free community. I'm not pushing the paid one. It's just the free one. Wealth Through Real Estate is on my Instagram right there. It's that link.
So guys, go check out Michael's Instagram page. Check out his school program, and definitely check out Mike. You guys watching the call right now, thank you so much. If you want to connect with me, just click this turquoise link, registers you for my group. If you want to see past videos of future speakers, subscribe up to the YouTube channel here, the purple link in the side. And other than that, Mike will see folks in the world of future virtual networking, right?
Yes, sir.
All right, guys. See y'all later.